Good morning, lovely viewers. Welcome once again to today's episode. Please, if you have missed our previous episode, please watch so that you can catch up on today's discussion. My name still remains Uncle Richie, and I bring you investment up close. This program is sponsored by EDUCATIve Trading and Final Ride Production. Please, if you haven't subscribed, please do so. Subscribe and share. We are on Facebook and Instagram. NAKAY GH on Facebook and NAKAY_GH on Instagram. We begin our lesson for today on objectives of investment. The first thing you have to consider is how to keep your money safe. Capital preservation is one of the primary reasons people invest their money. Some investment helps keep hard-earned money in safe from being eroded with time. By parking your funds in this instrument or schemes can help ensure that you don't outlive your savings. Fixed deposits, government bonds, and even an ordinary savings account can help keep your money safe. Although the returns on investment may be lower rate, the objective of capital preservation is easily met. Next thing we'll look at is to grow the money. How to keep the money and how to make the money grow is the second thing we'll consider. Another common objective of investing money is to ensure that it grows into sizable coupons over time. Capital appreciation is generally a long-term goal that helps people ensure their financial future. To make the money you earn grow into wealth, you need to consider investment options that offer a significant return on the initial amount invested. Some of the best investments to achieve growth include real estate, mutual funds, commodities, and equities. The risks associated with these options may be high, but the return is generally significant. The third thing we will consider is to earn a steady stream of income. Investment can help you earn a steady source of secondary or primary income. Examples of such investment include fixed deposits that pay a significant or a regular interest, or stock of companies that pay investors dividends consistently. Income generated investment can help you pay for your everyday expenses after you've retired. Fourth thing we will consider is to save up for retirement. In our first episode, we mentioned some objectives of investment. So as we are continuing, we are trying to explain for everybody to understand and catch up with us. When you retire, saving up for retirement is a necessity. It is essential to have a retirement fund you can fall back on in your golden age. Because you may not be able to continue working forever, additionally, it would be unfair to depend on your children to support you later in life. Particularly if you have children of your own to raise. By investing the money you earn during your working years in right investment options, you can allow your funds to grow enough to sustain you after retirement. It is so painful to depend on your children when you retire. By keeping your investment in the right instrument will save you from depending on your children, relatives, friends, and some associations. So it is essential that as young as we are, you start savings. The fifth thing is to have a financial goal. Investing can help you achieve your short-term or long-term financial goals without too much stress. Some investment options, for instance, come with short lockup period or high liquidity. These investments are instruments to pack your funds in if you wish to save for a short-term target. Additional investment consideration. There are various of them, but I want us to look at the main things you should consider. If you are going into money market investment or any other, being in stocks, check the performance as we have discussed already. But here, I want to mention but few. For all forms of investment that you consider, even in real estate, look at the rate of returns. Consider liquidity. They should be liquid enough. Liquidity means that as and when you need your money, you should be able to access it. So the company you invest in, the institution should be highly liquid, and there are records to prove. Please check. Real rate of returns. If they tell you they are giving you 1 cedi at the end of the period, it should be 1 cedi. More importantly, diversify. Don't put all your eggs in one basket, as we always say. Diversify your funds. You have company A, B, C, D. So in making your feasibility study, make sure that you diversify your funds by not giving it to one company or an institution to manage. Investing in your homes increases its value and equity. You can also go into real estate. You can build and rent out. Those are all forms of investment. So finally, start your own business. You have control over the income and the expenditure when you control your own business. Viewers, we will end our introduction to investment here. If you have any questions, please comment and we shall come and address it. Next week, we are going to talk about the various types of investment. Treasury, FDI, the fixed deposit investment. The stocks, as I mentioned, we are going to explain the bond. We are going to take them one after the other and explain for you to know when, how, and even which company to invest with at a particular time. We will take the stock market from next week and we'll break it down for everyone to understand. I will end here. If you have any comment, please let us know. We will address it and we'll come your way again next week. My name still remains Uncle Richie, and this program is still sponsored by AJ Trading, dealers in all kinds of electrical gadgets. At the same time, we are sponsored by Final Ride Production. You can locate them at Dansoman. Thank you and see you again next week.